Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, and today I'm really delighted to bring to you Marc Faber. Marc Faber is the editor and publisher of the Doom, Gloom, and Boom report. Now, you can find that on gloomboomdoom.com. Marc, thanks so much for joining me on Small Caps. I've loved listening to you over the years. We met in person a long time ago, but you're now living in Chiang Mai. Let me start this conversation, Marc, if we could, by just asking you, we're in a mess globally at the moment. What should we have done to not get into this crazy position we're in at the moment?
Well, I think the answer is actually quite simple. I believe that central banks went off their mission, essentially, which is to see to it that money has some value. In other words, your paper money, that it doesn't depreciate, that it's a store of value, and that it is a reliable unit of account. And somewhere in the 1980s, that mission got lost in the boom of assets, because as they eased the monetary policies, and I have to explain here, the central bank's easy monetary policies were kind of forced upon them by growing fiscal deficits. You understand? The government, they can have deficits, but in order to cover the deficits, the fiscal deficits, they ought to increase taxation. Okay. So your personal income tax goes up, and the sales tax in the department stores goes up, but these are visible taxes, and individuals don't like to be taxed. This is one of the human natures. They don't like to pay taxes. But if the tax is invisible, and let's face it, that inflation is a tax, it arises because fiscal deficits are financed by money printing. So all the years of essentially deficit financing and all the years of asset appreciation were inflationary, but it was an inflation that the public likes. In other words, when home prices go up, they like it. They don't like it forever, because as home prices go up and as commercial properties go up in value, eventually rents also go up. And that is something that the majority doesn't like, because the rental expenditures is paid by the majority that doesn't own commercial properties. It's a minority that own a lot of commercial properties. And even home prices is not obvious that it's beneficial. But initially, people liked it, this asset inflation. And the portfolio managers all applauded the central bankers, because portfolio managers get paid by the appreciation of the assets. In other words, you manage $1 million, it goes up by 20% per annum every year. The asset grows, and therefore also your fees. This is, of course, applauded by the financial community, and their bonuses go up. So the financial community is actually also guilty, in the sense that they encouraged and tolerated irresponsible monetary policies. But I would say, especially after the first financial crisis in 2000, 2002, the Federal Reserve in America, the Fed, they kept interest rates artificially low, and they deliberately produced a housing bubble. That was a deliberate action, supported by Keynesian like Paul Krugman, And also Bernanke said, yeah, well, if home prices go up, we can postpone the problems and so forth. So they kept interest rates artificially low. And we had this gigantic housing bubble with low quality credit, subprime lending and so forth. Then it collapsed and led to the great financial crisis of 2008, 2009. And after that, the Fed doubled down and kept interest rates near zero. And in Europe, the geniuses at the ECB went into negative interest rates. You understand?
Yeah.
And that was really a colossal mistake, especially since they kept these zero interest rates and below zero interest rates at those artificially low levels for far too long. They should have, maybe for a year, I could understand, they would have said, well, we want to kind of solve the financial crisis and so forth. But it's not the solution. It just postpones everything.
Yep.
And now, when inflation, you see, inflation is a very complex issue, because when stocks go up, people will say it's a bull market. When the property market goes up, they say it's a bull market. But when the price of carrots and potatoes and fish and meat goes up, they say it's inflation. Yes, it's consumer price inflation. The other is an asset inflation.
Yeah.
But in character, both are the same and both are undesirable, because the asset inflation produces a generation of people who cannot afford to buy properties unless they leverage, to the hilt. They borrow 90%, 95%, or even 100%. So these were monetary mistakes that occurred. And because interest rates were at zero, it encouraged people to have zombie companies.
Yeah.
You understand? If you borrow at 10% per annum, you have to achieve a profit of, say, 12 or 15% or 20% to make a deal out of it. But if your cost of financing is zero, you don't need to show a profit for years.
Mm.
You can keep on postponing it. So that created a lot of misallocations of capital. And that, I think, it was the mistake that could have been avoided. But, in a bubble, the Fed prints money,
yep,
and the people are applauding it. Nobody's critical.
Because they have the wealth effect. So they're happy.
Yes, they have a wealth effect. Everybody becomes a billionaire in Vietnamese dong.
Yeah. They've kicked the can down the road, and they've continued to kick the can down the road. Is this the end of the road, Marc?
Well, this is a question we investors and observers always ask us, when is the end? You understand? Mm-hmm. I knew people in the mid-'80s, they thought the debt growth in America is unsustainable and that the whole thing will collapse. Okay, we had one day collapse in '87, also in Australia, where all these entrepreneurs, the Australian entrepreneurial stocks, they got slashed by 50% in one day. But afterwards, it recovered with different stocks. But it recovered, and the property market has kept on going up and so forth. And then the opening of China was, of course, good for the world in two respects. First, they had a very large and growing demand for industrial commodities, which was beneficial for Australia. And two, because they produced goods at the low prices compared to what we can produce in the Western world, their share of export markets grew, but they also caused disinflation in good prices.
Yeah.
In other words, If you bought a telephone in year 2000, it was basically cheaper than in 1990. Certainly when you consider the quality improvements, but also car prices and so forth, good prices, appliances and so forth, didn't go up in price much. Services did go up, but the central bankers have a funny way to calculate inflation.
Oh, don't they?
Yeah. Which understates the cost of living increases of people.
Yeah.
But, you know, referring to your question, you look at Argentina and you look at Turkey. Turkey has an inflation rate of, say, 80%. Mm-hmm. And if you and I go on a romantic walk on the on the side of the Bosporus in Istanbul, life is normal. You wouldn't notice that they have 80% inflation. And this is one of the concerns I have at the present time. Okay, the Fed has increased interest rates, but the last time inflation was as high as it is now was in 1973, 74.
Yeah.
And by then, say they didn't have what we call today the Fed fund rate. They used essentially the prime rate, the lending rate, but it was at 12%.
Wow.
Today, it's, you know, the 10 years Treasury bond was over 9% at the time. And now the Treasury, the 10 years, is at less than 4%, about 3.5%. So inflation adjusted, the reality is that interest rates are still far too low. The inflation rate is, say, I don't know, each household has a different inflation rate, but it is between, say, 6% minimum to 12%.
Yeah.
The cost of living increases. Yesterday, I saw the cost of living increases in Europe, in the EU, for food, up 15%.
Doesn't surprise me.
And you understand, this is a social issue because the rich people say, I consider myself reasonably fortunate. Whether the cost of rice or of beef or pork goes up 20% or not is not a factor in my overall expenditures. But for a family in the low income brackets,
yeah,
I can tell you they all suffer. And I've maintained this for years, that the standards of living of the lower classes had gone down compared to their parents. And that young people today, inflation adjusted, earn less than when their parents were 35 years old, and they have less money than their parents had when they were 35 years old.
Wow.
We have statistics, this is not my invention, produced by the Federal Reserve in America. Except the Federal Reserve board members, they don't look at these statistics. They're busy polishing their images and giving speeches and forecasting and playing the political game and so forth. So they are not, they don't understand. Recently, a Fed governor, the head of the San Francisco Fed, said, yeah, there's inflation, but it doesn't touch me. Because they're not ordinary people, do you understand? They all drive around in limousines and have bodyguards and so forth and so on, and protected homes. But ordinary people, they suffer. And that I'm sure also in Australia, if you go to the workers, their wages have gone up, but not to the same extent that the cost of living has gone up. So in other words, if you measure truly an economy according to the standards of living, we are all in recession because the wages have gone up less than the rate of inflation. And then people who have borrowed money at variable rates, it depends if you borrow money for 50 years at 2% is one thing. But if your mortgage is adjusted every month according to the Reserve Bank rate or to the Fed fund rate, then now interest rates are going up. It squeezes households.
It is squeezing households. We are.
But I have no doubt.
Yeah. It feels to me like that the middle class is disappearing. We've got the sort of the 1% and then a big long tail. And you said something pretty interesting before, which was inflation on the food side of things. Like when people get hungry, they can get pretty unhappy. Do you think that we're going to see a lot more social unrest given what's going on at the moment?
Well, this is a very important question. And we could see more social unrest, but you understand, the public has become fearful of the government. Mm-hmm. It's a tyranny of incompetent bureaucrats. And we've seen this incompetence in regard to COVID. Oh. Right away, the governments all over the world, they told people you have to get vaccinated. And some who didn't want to get vaccinated, they were sent into camps, into like leper colonies. Yes. And these are democratically elected officials. Allegedly. You have to think about this. Mm-hmm. Here, I grew up in an environment at school, they always told me, oh, we are a democracy, we are free. This is all nonsense. We are less free than if there was a king, because the king would be deposed right away or killed or assassinated. But in a democracy, the bureaucracy has such a power, and they can tell people, well, if you don't get vaccinated, you're not going to get a job. Yeah. So what do? You have two small children at home and a wife that complains about everything anyway. It's the usual story. It's vice versa as well, to be politically correct. But then obviously the guy has to get vaccinated to keep his job.
Yeah.
And so I've noticed this because I have many clients in America and readers. Up to a few years ago, people were quite critical when you sent them an email and asked them about something, you know, and also in discussions. Now people shut up. They're scared.
Yeah. And
this is the reality.
Yeah, and it's getting more intrusive, isn't it? I mean, it's interesting, Mark. Today I had a phone call, and I don't want to get us banned or anything, but I had a phone call today from the bank, and the things they were asking me, I said, "Why are you asking me? This is very personal information, which I don't want to." Oh, it's all about the rules and regulations that have changed. But there's no pushback anymore, Mark. We've lost the art of critical debate and critical thinking.
Well, this is exactly what I discussed with a friend of mine who is a private banker in Switzerland. Mm-hmm. I said to him, how is it that people in banks don't fight all these additional requirements that are imposed by these retarded and dumb, stupid compliance people in the various banking commission and Securities and Exchange Commission? All these regulations are completely useless, but they bother the clients with it. I mean, some of my private bankers and so on, they tell me half the time is filling out forms. I can believe that. When I started to work for White Weld in 1970 in America, then I came to Hong Kong in 73, and I've lived in Asia since then. Both at White Weld and later at Drexel Burnham, where I worked, I could open an account with one sheet of paper. this size, A4. The client had to sign at the bottom here, and the account was open. No passport, no questions asked, nothing. Later, when they wanted to trade for options, they had to say another form and down here.
But simple.
And nowadays, you get like a booklet, they thick of papers to open an account.
Ridiculous.
A normal person, I've studied, but I'm not a lawyer. I wouldn't understand this. And to read this would take me a month. Do you think I have a time to read for a month?
And no one does.
Nobody does. And so I asked my friend, how is it that the staff of the banks don't oppose all these new regulations? He said to me, Mark, it's very simple. The bank staff, they all are paid a salary.
Yep.
As we know, bankers, all of them are overpaid. Some are grossly overpaid and some are less overpaid. But the reality compared to, say, a small business owner, whether it's a plumber or a carpenter or whatnot, he will never make the money a banker makes. But they are employees and they get a high salary, relatively speaking, with no responsibility because they can have their money somewhere else. If the bank goes bankrupt, they get their pensions. Their number one ambition is not to get fired.
Absolutely.
So they shut up.
Yep.
And the whole bureaucratic system is built nowadays on people shutting up. It's like the smaller bureaucrats at the bottom. They think their bosses up there are complete idiots, but they will never voice an opinion because they depend on the bosses up there to promote them. And it is true in the bureaucracy, the higher you go, the more the people become stupid.
Where does this leave us as a population globally? I mean, it seems to me it's all messed up. And
yes, but we have to see the people messed it up because if you look at the economic history of the 19th century, 1800 to 1900, is a world of entrepreneurship, of people. They went with the carriages from the East Coast, they traveled through the territories of Indians, and they set up small towns in America and small industries. And if they failed, who helped them?
Nobody.
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 The government was not a factor. The taxes in those days until 1910 in the US and in Europe were on average about 9% of GDP. Now,
sorry to interrupt you, Mark. I thought taxes only really truly came in after the Fed started in 1913.
Yes, correct. Before that, until 1910, they were like 9%. They had taxes because the government had to finance, the bureaucracy, but the bureaucracy was small.
Right.
And the government in the US had to finance, as in Europe, and there was wars.
Yeah.
That was always a big pastime. Now it's also come to Australia. I think the Australians are mad to get these nuclear submarines, but that is a different story. But you understand, people were dependent on themselves. They had personal responsibility.
Yeah.
And these people traveled alone or with entire families, and the wives had the small children and so on, into the unknown. This was a different spirit. And now, over the last 50 years and so, we have a creeping socialism.
Correct.
In other words, if anything goes wrong, the government must help.
Must.
Nobody is responsible for what he does. Everybody's a victim. I'm also a victim of the system. I've suffered all my life as a victim, and so on and so on. So the mentality has changed, and the state has expanded like a cancer from, say, 9% or 10% of GDP to now, in some countries, 60% of GDP. And how can you have economic growth when the government is 60% of GDP?
Well, people just don't bother. They just turn around and say there's no point.
There is a point. And, you know, in socialism, we have huge black markets. Right? Now we have increasing smuggling and black market activity. In other words, someone has a job, but he also fulfills other jobs on the black market. In other words, you live in a neighborhood and you happen to have some skills in kind of plumber. You're a plumber. Then you can go and fix something in your neighbor's house.
Yep.
And the neighbor maybe has some skills in cutting wood. So he'll cut some wood for you and do some carpeting work in your house and so forth. So there's an informal economy building up.
Is that more like a barter system? Because right here in Australia and globally, Mark, what we're seeing is more control with central bank digital currencies and the cash. You know, here in Australia, there's a lot of places now that say we don't accept cash anymore, a lot more control coming in. And if you've got that sort of control, the only way to go is back to bartering.
Yes, correct. I mean, they want to control everything, and they want to know from each citizen what they spend and what they do. Actually, for what is not entirely clear to me, because the cost, you know, when you have taxation, and this was the subject of my thesis, is very complex, because the cost of collecting a tax may actually be higher than what you collect.
Yeah. And when
I'd like to add here, and this, you know, this is another subject, the wealth inequality. Of course, when we have inflation, wealth inequality grows because some people start with no assets. They finish school with no assets. But my neighbors, they finish school with a collection of Rembrandts and Picassos and Monets and so forth. They have lots of assets. So in an asset inflation, my neighbor's net worth goes up more than I can ever earn with my income.
Mm-hmm.
This we have to realize. So wealth inequality goes up. But there is another aspect to consider. The wealth inequality leads to, as you suggested, to social discontent. And it leads to the impoverishment, as you pointed out, of the middle class and lower classes, and the concentration of wealth at the upper level among the 1%.
Yeah.
So, I mean, where does it all lead to? We don't know. But I think looking at the Fed, they are now concerned that increasing interest rates too much would have a negative impact on some sectors of the economy, in particular at the present time on commercial real estate. There's a huge sector in the market, you know, shopping centers and office buildings, hotels, and so forth and so on. And this has been financed by regional banks, and the regional banks are not in a good shape. So they are reluctant to increase interest rates too sharply, which they should do according to the rate of inflation we have. And by increasing a little bit, the system will adopt. In other words, say inflation is 6%, then the unions will go and say, we want to have a wage increase of 6%. Okay. All agreed is fair, or they should get 8% or 9%. But anyway, They get an increase. But then the wage cost goes up, and the entrepreneur, the businesses, I mean, whether it's BHP or Rio or whatever it is, they will then increase the prices by those increase in labor cost. And they will also increase prices according to the increased cost of interest payments, because they have large borrowings. So it's the way inflation becomes endemic in the system. In other words, a Fed chair once said, inflation is like a toothpaste. It's easy to squeeze it out. Once it's out, it's very difficult to push it back in.
Absolutely. Yeah.
So here we are as investors, and then you ask yourself, the question is no more how do I make the most money? The question among asset holders is how do I lose the least? Mm-hmm. I believe, okay, I'm old-fashioned in this respect. I think the best is probably to own gold, silver, and platinum. Physical.
Because they've always done what they do best, which is protect your wealth against rising inflation.
There are other things that do better from time to time than gold, because gold doesn't produce anything. You know, a corporation like Microsoft has a cash flow and so forth. But in a period where you want to preserve money, the value of your money, you can only increase the quantity of gold, silver, and platinum to a very limited extent. You can increase the printing of money to an unlimited extent. You understand? The government can issue more and more paper as long as people...
It becomes monopoly money. It's like, it's you know, the house can be worth $10 million. No one, it doesn't matter. But gold will come back.
When I grew up, my father, he was the orthopedic surgeon, and he had mostly, sportsmen as clients, cyclists and football players and so forth, soccer players, and. Anyway, he was a high-earning person because he was a specialist, and he always said, "Oh, my friend here, he's a millionaire."
Right.
It was a big thing in the 1950s to have $1 million.
Absolutely.
If you go nowadays to any nightclub and you tell them, I have $1 million, they laugh at you.
Because until you've got a B,
you have to have not 1 billion. Rich is 10 billion, 20 billion plus. Billionaires, they're like 5,000 around the world already.
Okay, so for our audience that is sitting listening to you at the moment, who are a little bit confused about what to do, you said a moment ago, in this sort of environment, gold, silver, platinum, and physical, are you saying that diversification is not your friend at the moment? So other hard assets and inflationary, I guess what I'm trying to get to is, what should people be doing? Just having a look at gold? Or... Yeah. And this is not financial advice, by the way, ladies and gentlemen. This is Mark and I having a conversation. Please do your own research. We're just sort of muddling around about what's going on out there in the world, but it's not considered financial advice. But Mark, it's a crazy world at the moment.
Well, first of all, when you ask me what should people do with the money, if I were a doctor, you would come to me and say, Mark, today, what kind of pill should people eat? I would tell them, you will survive a long time by drinking beer and smoking a cigarette, especially if you smoke in a place that is not allowed to smoke.
I love his irreverence. I love it.
And then you have a whiskey before you go to sleep, and then you sleep well. But as an investor, You understand? There are some young people, there's medium-aged people, old people.
Yeah.
Every person has a different risk profile.
Yeah.
For instance, if my portfolio goes down by 10%, I don't have sleepless nights.
Mm-hmm.
But some people have.
Yeah.
So my advice, as a general advice, at all times, you should be diversified. You should have some real estate and some stocks, some precious metals. If you like art, buy by all means some art and collectibles and so forth. And the young people, they like Bitcoins and cryptocurrencies and so forth. Some have, I guess, the concept has value. Whether all these, the problem is not Bitcoin. The problem is competing currencies. So the supply of competing cryptocurrencies can grow and grow. And there are some issues with cryptocurrencies. And the issue would be in the case that our friendly governments, democratically elected, decide to shut down the internet for the population.
Wow. That possible?
Well, is it possible to lock in people? In the 5,000 years of human history, nobody has been this stupid to lock in people. But our democratically elected officials who travel to Davos and then tell the world, oh, we're all in favor of democracies and of freedom, and we have to fight these ugly Russians because they're anti-freedom and so forth. These people, they locked down the population.
Yeah.
And the population sat there and didn't do a thing. Except a few Australians, they went to the street, but you saw yourself what happened with them. They were beaten up by the police, by the friendly policemen.
I know.
Because the policemen were told, if you don't beat them up, you don't get the promotion. I think the bureaucracy is the worst leadership we can have in any system, because no bureaucrat is responsible. They will always say, oh, I have to search you at the airport. Sorry, but this is
my job.
My order. I have to do it. I don't like to do it, but I have to do it.
Yeah.
I have to look for your nail clipper.
Yeah.
And for your eye drops. The bottle is this big. That I have to do it because I've been told by the Prime Minister.
It's getting worse, and we're getting more bureaucratic. And it appears to me, well, this is here in Australia, that it's a very comfortable thing to be in bureaucracy, and it's very safe and it's very secure, and you can sit back and, you don't have to do too much. Is that just going to continue? Are we all eventually going to work for the bureaucracy? You mentioned social. Maybe we just turn to a socialistic style of world.
Maybe, perhaps. The Bolshevik Revolution in Russia started with the brilliant idea to overthrow the aristocrats that owned the land and the Tsar and so forth. What did they do afterwards? They took the land away from all the peasants, from all the farmers, and nationalized everything. Then what happened to the industrial production and farm production? It collapsed.
Yeah.
And you had mass starvation. Mass starvation. The Bolsheviks killed many more people than anyone else in history.
History.
The gentle, and then we have all these young people who are Marxists and talk about, we need more socialism. We need the government to do more. No, we need the government to do less and to step back and to reduce regulations. This is the reality.
Yeah, but that's kind of like...
And anyone who sits there and doesn't fight, he is to some extent guilty.
But isn't that just like inflation? Once you've got it out, like once people get used to something, it's very hard for them to change the way they.
Yeah, I agree. This is the danger of demagogues and politicians. And as I said initially, the inflation was applauded by many people, but the fund manager, he also has a wife and a mother. And when the mother tells him, oh, this inflation is hurting me because now I have to pay this more for the potatoes and that more for the mutton and that more for the beef, then the fund manager starts to listen. Before, he was always applauding when the central banks was printing money.
Yeah. So do you think we're at a crossroads right now, Marc?
I'm not sure we have reached a crossroad, but we've reached one crossroad. That I'm 100% sure. Inflationary cycles and interest rate cycles are very long-term cycles. I don't want to go back to 1800 and tell you each peak of interest rates and each peak of inflation and each trough. But the last, say, two major cycles were 1942, in the Second World War, interest rates in America bottomed out, as well as inflation. Then after the war, in the 50s and 60s, interest rates rose gently. They rose, but not too much. In the 70s, we started, that's when I started to work, in 1970, the essentially prime rate in America was at 6%. The bond yield, the 10 years, was also at 6%. It went to 15.84% in 1981. Okay?
Yep.
That was the peak of interest rates, 1981. The low in the stock market was 1982, August. By then, the Dow Jones was at the same level than in 1966. So 82 is 16 years. And in real terms, inflation adjusted, it had declined by 70%.
Right.
After 81 and 82, interest rates were in a downtrend, gently but steadily all the way. And the low in interest rates, in my opinion, this is an artificially low, engineered by the Fed, but it was in May, August 2020, when the 10 years Treasury yield was at 0.57%. Since then, inflation has accelerated and interest rates have been in an uptrend. I think this inflation uptrend and interest rates uptrend will last at least 20 years.
Wow.
At least. Interrupted by setbacks. You know, now we had a bout of inflation. Now commodity prices have been coming down. And because of the demand destruction in the system, we are all basically in a recession. If you compare today's economic activity to 2019, everywhere is less, is down. Industrial production, traveling, and so forth. But the rate of inflation will come down now, but then the Fed will cut rates and then it will reaccelerate. So like in the 70s, inflation at the beginning was not high. And then interest rates in 74, 76 fell. And then they rose again to 77, 78, and then they fell. They rose again. We can have big swings. Like in a bull market, you have correction. Up, correcting, up, corrected. In an inflationary cycle, you have bouts of inflation. It comes down, and then the next wave comes.
And you don't think that the central banks are going to step in and stop that from happening and really try and control it a lot more than they have back in the 70s?
No. The system is bankrupt.
Yeah.
The pension funds, how the pensions would be paid if the pension funds, their assets drop by 50%?
The people don't get paid.
Yes, how do you explain to your parents and grandparents, sorry, old folks, I don't want to pay more tax, so your benefits will go down by 50%. This is a huge problem. The system is basically broke. The only way is to go the Turkish way and Argentine way, as to print money.
And that's what they'll continue to do, I suspect.
They will talk to you, they will give speeches and say, we are fighting inflation. We are fighting for democracy and peace, and then they go and bomb innocent people in Syria, in Afghanistan, in Libya, everywhere. It's all BS.
That's a technical term, ladies and gentlemen. Marc, I don't want to finish this conversation before addressing what I think is quite important, and that is something people are talking about, the BRICS. The move, I guess, from the West to the East, and the potential for that sort of US-led strength of the US dollar to be slightly changing as countries like Russia and China and some of the Gulf states are turning around saying, we're not going to use US dollars anymore. I'd love your views on if you think there's going to be a move away from the US dollar.
Well, I think every investor can understand this very well. If you have your foreign exchange reserves in US dollars, like the Afghanistan had or Russia had, and then some people in the US come and tell you your reserves are frozen.
Yeah.
Who on earth and in his right mind would hold dollar reserves with the Fed in the US?
Exactly.
You really have to be brain damaged to do that as a government.
Yeah.
And so I think it's quite logical that countries such as India and China and Russia and Brazil and Indonesia and Pakistan, Bangladesh, these are all countries with more than 200 million people, that they say, well, if we trade with China, we settle in yuan, in the Chinese currency or in our local currency. We bypass the SWIFT system in New York. And yes, I think that, I mean, I discussed this depreciation of paper values. The dollar hasn't lost much of its value against the euro. You understand? The paper currencies all over the world have gone down together in value.
Right. Yeah.
In other words, your Australian dollar today buys less than 20 years ago. That is a depreciation in the purchasing power of money. Has happened all over the world. But your Australian dollar today has less value against gold compared to 20 years ago.
100%.
And so my view is that paper monies all over the world will lose value against gold and silver and platinum, with ups and downs. You know, there's a lot of manipulation in the market as well, and traders. And when the price of gold goes up, it's actually interesting. So as an example, in a country where I live in Thailand, people will sell their gold when it goes up, because in bad economic conditions, they will sell their last reserve they have.
Wow. Yeah.
You understand?
Yeah.
If you're hungry, you're not going to eat your gold. You're going to take it to pawn shop and sell it. Yeah. And so this is an important issue. Of course, the quantity of money is more and more every year, but the psychology of people then also has an impact. If they're squeezed, they have to sell something. They don't want to sell the cars and the motorcycles because they need them to go to work.
Yeah. Yeah.
So they will sell the coins that they inherited from their grandparents or whatever. And two, I think that, I mean, it depends. A big trend in the world is for people to work from home.
Mm-hmm.
And because we have the internet, you see, I lived now for 20 years in Thailand. I would not be able to do my job without the internet. I would have to be in a financial center in Hong Kong or in Sydney or in New York or Dubai or Zurich or London or Rio or Toronto. But because of the internet, I can be in the middle of nowhere. Yes.
Absolutely.
And so the world, 1800 to recently, is a process of urbanization. Now, you go to New York and you go to San Francisco and to Baltimore and Chicago. Depopulation. Why? Because people get fed up with the governments and they want out. And they get fed up with higher and higher taxes and more regulation and less security. You understand? This whole the defunct police movement is a typical socialist, communist idea how to destabilize the population. Then the destabilized population will accept a strong leader, a totalitarian leader, like a socialist.
Mm-hmm. All right. We're running out of time. I want
like Pol Pot.
Oh, don't
Pol
say that.
Pot was
Don't
a good socialist.
Oh, jeez. Mark, a couple of things before we go. You said for the next 20 years, my goodness, I hope I'm still around then. You feel that inflation and is here to stay, and you say it's going to be a pretty. And if that's the case, then maybe equities is just not going to do very much. Against
no, it's not going to do very much. But in general, you'll be better off in equities than in long-term bonds.
Okay.
Now, I'm not saying that over the next 3 weeks, long-term bonds could not rally because they're oversold. But in general, in equities, in inflationary times, they don't do well, but they do better than many other things.
Okay. But gold,
because you of course you have to buy things that are, say, at a discount to asset value.
Mm-hmm.
But in general, if someone comes to me and says, Mark, I assume inflation will be here for a while, would you advise me to buy all bonds or all stocks? But you can only do one. I would say all stocks.
Interesting.
Bonds is the recipe to disaster in inflationary times.
That's a very, very good way to end it. And I do hope we have another conversation in the near future, because this is our first one.
Well, it has to be before 20 years, because in 20 years, I may not see the peak of inflation. Or I may see it from another world.
Oh, well, who knows? Who knows what will happen? But look, I want people to know, you wrote the book. It was called Gloom, Boom, Doom, didn't you?
I wrote several books, but the last one, which was rather successful, was Tomorrow's Gold, Asia's Age of Discovery, because I wrote it in 2001. And at that time, nobody believed that Asia would become really the center of economic activity, with China opening up. And now India becoming, I mean, India, can you imagine? They were under colonialism for so many years. Now they overtook the British economy.
Yeah.
I think it's
more
wonderful.
People than the Brits.
The coolies of the British are now larger than the British are. It's a wonderful world.
I just want to ask you this. Where did the title Gloom, Boom, Doom come from?
because I started to write in the 70s already, because I never trusted the research that is published by Wall Street firms.
That's a very smart idea.
So the Wall Street firms like Drexel, they always said, buy, buy, buy. And I would go around and tell them, no, sell. In those days, this was allowed. Nowadays, the compliance department would send you packing. But anyway, it was also a Jewish firm. And to the credit of the Jews, they like controversy. They like discussions. They like debates. And then, so when Drexel folded in 1990, I started my own business. And then I thought, well, the report had a lot of followers already then. And I was called in Hong Kong Dr. Doom because I had predicted the day before it happened, the crash of 87. It was a coincidence, not that I was smart.
No, don't say that. It wasn't a coincidence. You were smart.
It was accidental. But anyway, after that, I thought I can commercialize the report. I choose the report, the Gloom, Boom, and Doom report.
Gloom, Boom, Doom.
Yes. Highlights unusual investment opportunities around the world.
I love it. And ladies and gentlemen, if you want to find out more, you can actually go to gloomboomdoom.com. And you'll find a lot more about Dr. Faber and what he's doing. Look, it's been fantastic conversation with you. Please come back and have another chat in a few months' time. Will you do that?
I hope your viewers will also find it fantastic.
I think they will. It's been an absolute pleasure, Marc. Great to see you. Thanks so much.
Thank you very much. Bye-bye. Sawati krap.
What is it? Say that again.
Sawati krap.
Sawadee krap. I should know that. I was born in Thailand. You'll have to teach
Yes.
me.
Sawati, the woman says Sawati ka.
Sawadika. Yes. That I do remember. All right.
Khop kun mak krap. Thank you very much. Bye-bye.